Hello and welcome back for another video for the Exam 1 review. In this video we're going to start working through problem 2. So problem 2 has us working through the content of chapter 2. The first step in this problem 2 will be to record these journal entries, then to post these entries to the ledger, and then to prepare a trial balance. So again, I'm going to break it into 3 videos. Video 1 here, we'll just focus on preparing the journal entries. Alright, so this says the following events occurred during April of 2018 at GHI Company. It says the owner first, Jeff High, invested $12,000 cash and a vehicle valued at $23,500. So I'm going to go over here to my journal. The first thing that I'm going to need in the top left corner is the year. Then I'm going to need the date. We're going to call it April 1. April 1. Let me just right align that so it's a little prettier. We'll set all those so they work that way. I don't have to keep changing it. There we go. Alright, so again, on April 1, it said that the owner invested cash and a vehicle into this company. So I know this time that there's 3 accounts that need to be affected. First, the business now has more cash, so I need to increase cash, and I increase cash with a debit. Second, the owner invested his vehicle into the company, which means the business now has a vehicle. A vehicle would be another example of an asset, which needs to increase, so that asset increases with a debit. Both the cash and the vehicle need to be included as an investment, and investments always increase the owner's capital account. Capital goes up with a credit, so I'll credit high capital. So a debit to cash, a debit to vehicle, and a credit to high capital. Let me just grab those numbers. So it was 12,000, 23,000. That means the credit to capital would just be the sum of those 2 numbers. Remember, our total debits always have to balance out with our total credits. Alright, we're not going to worry about recording explanations with these journal entries, so let's just jump down to transaction number 2. On April 2nd, it says we purchased supplies on account for $750. So this time I just needed 2. Don't need that April again because month didn't change. Only got to put it with the first transaction. Again, it says we purchased supplies on account. So I know the 2 accounts that are affected are supplies, which are an asset. The business now has more supplies, so I need to debit the supplies asset account for $750. I purchased them on account, which means I now owe more money. I credit that to accounts payable. Accounts payable, a liability. I owe more, so that liability goes up with a credit. A debit to supplies, a credit to accounts payable records journal entry number 2. The next transaction happened on April 5th. It says we purchased equipment for $8,000 paying a cash. So I'm just going to start that with a number 5. I purchased equipment, so the company now has more equipment. Equipment is an asset. Assets increase with a debit, so I'm going to debit equipment. I paid cash for it, so cash needs to go down. Cash is an asset. To make it go down, I have to credit it. So a debit to equipment and a credit to cash for the value of that equipment, which was $8,000. On the 7th, it says we perform services for customers on account for $10,000. So if we perform services for customers on account, my 2 accounts that are affected, sorry, it was the 7th. My 2 accounts that are affected are accounts receivable, which is an asset. Someone owes me more money, so accounts receivable needs to go up. And service revenue. Service revenue is increasing as well. And that little trick I taught you in class still happens. Anytime you see a revenue, for now, we're going to credit that revenue. So accounts receivable, an asset, needs to increase with a debit. Service revenue, a revenue account, needs to increase with a credit. And that was for $10,000. On the 8th, it says we paid for the supplies purchased on April 2nd. Alright, so remember when we purchased these supplies on April 2nd right here, we put it into accounts payable that said we owed it. We're not paying it, so we know we need to reduce that accounts payable, that liability. It goes down with a debit. So I'm going to debit accounts payable for $750. I'm paying for those supplies now, which means cash is also affected. Cash needs to go down. Cash is an asset, so it goes down with a credit. So a debit to accounts payable and a credit to cash for $750 on the 8th. On the 10th, it says we performed services for customers and received cash of $6,000. All right, so the date again was the 10th. All right, now I received cash from those customers, so the company now has more cash. Cash needs to go up. Cash goes up with a debit. I received cash because I was performing services, so I know that service revenue needs to be credited. So a debit to cash and a credit to service revenue, and that was for $6,000. On the 18th, it says we paid employees salaries of $7,500. So if we paid those employees, I know cash is affected. Cash is going down, and I make cash go down with a credit, which has to be recorded second. Cash is going down because I'm paying for a salary expense. So it's a debit to salary expense and a credit to cash. And again, the amount was $7,500. On the 22nd, it says we collected from the customer from April 7th. So on April 7th, we said that this customer owed us $10,000. We put it into that accounts receivable. If we're now collecting, that means we now have more cash. Cash needs to go up with a debit. And we need to reduce accounts receivable, as this person now owes us less money. So a debit to cash, a credit to accounts receivable for $10,000 on the 22nd. On the 30th, last transaction here, it says the owner, Jeff High, withdrew $4,000 for personal use. All right, so if the owner is withdrawing for personal use, I know that I need to increase the withdrawals account. Withdrawals goes up with a debit. And I know the business now has less cash, so cash needs to go down. Cash goes down with a credit. So a debit to high withdrawals, a credit to cash, and that was for $4,000. And that's how we will record all of those transactions for problem 2.